Hey, it's your man, Charlie P. Today we're going to go over my Londonine strategy, and it's only 4 rules to this strategy, so it's super easy, and let's go ahead and just jump straight into it. The first example we're going to look at today is on the Euro CAD right here in this box. So the first thing you're looking for is for H1 to consolidate along the 10 EMA towards the end of New York session or early Asian session. Right here we have that. We've got this consolidation going on along the 10 EMA here. The second rule is more of a note, just saying this is a trend continuation trade. So you're always going to trade in the direction that the market was going prior to the consolidation starting. So if this is our consolidation, the market was going up into that before it started consolidating. So since we're going up before that consolidation started, then we're only looking to buy if we see a Londonine setup. The third rule, Londonine, this is where the name came from. The confirmation candle is going to happen during the London session, and it's going to be the 9 o'clock chart time candle. What do I mean by 9 o'clock chart time? If I hover my crosshair over this green candle, looking at this green candle right here, I'm going to hover my crosshair over that. If you look down at the bottom, you see today's date and 9 o'clock. That 9 o'clock for me translates to 1 a.m. in the morning. That's the 1 hour candle that formed at 1 a.m. Central Standard Time. So you would need to convert that to whatever time zone you're on, but that's why I like using the chart time. So not say 9 o'clock chart time, because that just makes it easier to, instead of talking about time zones and all that. Most brokers use the same chart time. Most of them, not all of them. And if they don't, then again, this is the 1 a.m. Central Standard Time candle. So convert that to your time zone if your chart doesn't have 9 o'clock for that particular candle. Moving along though. So the 9 o'clock chart time candle is going to completely engulf the entire consolidation. So what I mean, if I'm looking at this Asian session consolidation right here, I want all these candle bodies. We're not worried about the wicks. We're only worried about the bodies. So the highest candle body is right here. This candle has to engulf all of that. It has to close above all of that. And we have that there. So our 3 rules are met. It's really 3 rules and then you just enter the trade. But the fourth rule is just saying you enter the trade on the 15-minute chart. So let's go down to the 15-minute time frame. We were on the 14th. We go down to the 15-minute time frame. You wait on price to come down and grab the 50 EMA, which it did right here. That's my gold line. And when I say grab it, wait till it goes under it. Since we're going to buy this, I want the price to actually come a little bit under the 50 EMA so I can enter on the opposite side. And you would have gotten the trade around here, had very minimal drawdown, and you could have caught upwards of 143 pips. Now this trade luckily gave you multiple opportunities so that if you were not up during the London session to catch this trade, you had another opportunity. I wouldn't have traded this one because I wasn't going to be up that early, but I would have had an opportunity to hop in right here under the 50 EMA and still caught that whole move. So that's really it. Let's go ahead and just take a peek at another example. Actually, here's one right here. So let's draw a box here. And now we're looking inside this box. I'm going to use this same line here. All right, so we had price coming down into a consolidation where it started hovering along the 10 EMA. And since price came down before it went into that consolidation, now we're only looking for sales if we see Londonine. Here's our Londonine confirmation candle. That's the 9 o'clock chart time candle. I will prove that. Just put my crosshair over it. You look down there, you see that's the 9 o'clock candle. It closed past the entirety of this consolidation, or past the lowest point of that consolidation, the lowest candle body. So we have Londonine confirmed. All we do at this point is enter the trade. It's that easy. Like, it's not a lot of rules. So I'll go down to the 15-minute time frame. See, we were on the 19th. You see price came up and grabbed our 50 EMA right here. So you would have entered the trade around this area, and you would have been in and out of drawdown up until New York session. But ultimately, you would have caught over 60 pips had you held the trade that same day. I'm sorry, had you closed out of the trade that same day. Or if you would have held it, you could have caught more, upwards of, over 100 pips easily on that particular setup. So one thing about Euro CAD, because you could have gotten a trade in London session on this one, but like I said, you're in and out of drawdown. And even on that last example we looked at over here, where you had a second chance to enter in the New York session, Euro CAD specifically just normally gives you another opportunity in New York session. Like, the entry for Euro CAD is just normally in New York. That's just what it is, definitely most of the time. So that's just something, just a extra, just a fun fact. But anyway, let's take a look at some other examples. Let's go to the Euro JPY. Here's an example right here that we can look at. All right, so the first rule, we're looking for a consolidation along the 10 EMA during late New York or early Asian session. So this one I would say started more so late New York session right here, because here's kind of a peak or the start of that consolidation. And we see that price came down the day before that consolidation started, or technically the day of, since it's late New York session, but price came down before that consolidation started. So we're only going to look to sell if we get a Londonine confirmation candle. So those are technically the first two rules right here. We have our consolidation, and we have price came down into it. So we know that if we see Londonine, we're only going to sell it. The third rule, we're just looking for a confirmation candle. Is Londonine going to show up? Well, here we've got the 9 o'clock chart time candle. And, oh, I'm sorry, I forgot to draw my line. So we need to draw a line at the lowest point of our consolidation, because we need that Londonine candle to completely engulf the entirety of the consolidation. We had that. This 9 o'clock chart time candle closed below the lowest candle body. Now we just need to look for an entry. We go down to the 15-minute time frame. It goes back up. It grabs our 50 EMA here in London session. We go ahead and hop in that trade right there. That's 150 pips you could have caught that day, or held it a little. Well, now you could have got out of there. See, that's one of them. You'd try to been too greedy and swing trade that one, you'd have been hurt. But yeah, that's 150 pips. I'm definitely going to take that for that day. But great trade right there. Let me actually show you an example of what I mean by, I'm pretty sure it was one on, I think it was on the Euro USD I found. I thought it was. Freak did that example go? It was in like the early part of July. Oh, it is in my face. All right, my bad. I don't know why I didn't see that. All right, so check this out. Looking right here. This is an example of the how I say the 9 o'clock chart time candle has to completely engulf the entire thing. This would be one that somebody might get tripped up on. They could say, all right, we got this consolidation along the 10 EMA. I see price came up before that consolidation started. So I'm only looking to buy if we get a Londonine candle. Here's our 9 o'clock chart time candle right here. It's this green candle that came up. Now, in this consolidation, the highest point is right here. It's at the top of this little peak right here. That's the highest point of this consolidation, where the consolidation started, and it didn't close above that. So that's one that we pass up. That's not a Londonine setup. But that's what I mean when I say the 9 o'clock chart time candle has to engulf the entire New York / Asian consolidation. So just wanted to throw that note out there. Let's go back over to Euro Yen and see what else we can find over here. let's see, that was Londonine. Here's one right here. Looking in this area. All right, so rule one, we see that price started to consolidate along the 10 EMA in late New York or early Asian session, or throughout the Asian session, and price came up. It was coming up before that consolidation started. So if we get Londonine, we're only going to buy it. Our 9 o'clock chart time candle is this green candle right here. I can put my crosshair over it, but y'all just trust me, or you can back test it yourself and put the crosshair over it. But that's the 9 o'clock chart time candle. The highest point in this consolidation is at the top of this candle body right here. And we see our Londonine candle did close above that. So that is a valid Londonine candle. All we got to do now, go down to the 15-minute time frame. Uh-oh, where was I? Here we go. Go down to the 15-minute time frame. Price came down and grabbed our 50 EMA right here. So we enter the trade, boom, right here. And then you can ride that out for the rest of that day. That's 85 pips. You can hold it a little longer and catch over 100 pips on that trade. I'm telling y'all, this thing is easy. There's only 4 rules, man. There's 4 rules. That's it. Let's find us another one. What's that? I think it was one over here in May. I try to find these things so I can just get the video done a little faster. Here it is. All right, so here's our consolidation along the 10 EMA. Now this consolidation is very short. The lowest part of that consolidation is right here at the bottom of this candle body right here. Price came down into that consolidation. So we're on rule number 2 now. Price came down into the consolidation. So that means what? We only gonna sell it. Here's our Londonine candle. It's this red candle right here. It came down and closed past our entire consolidation. All you do now, you got it. You go to the 15-minute time frame. Wait on price to come back up and grab the 50 EMA. Bam. There you go. You ride that thing out. That's 200 pips right there. Woo, shoot. That's a good day. Let's go back to H1. Let's find us another one. Actually, I don't even have to change the page. Here go one right here. Yes, sir. Right here. Make that a little bit bigger though. All right. So here's our what's the name? Consolidation. Started hovering along that 10 EMA. The lowest point in our consolidation, I would say, would be at the bottom of this candle right here at the towards the end of New York session. So price came down before that consolidation started. So that means what? We're only looking to sell. Here's our 9 o'clock chart time candle. Clearly, it closed past the entirety of this consolidation. All we got to do now is what? 15-minute time frame. You know the drill. You know the drill. It comes up. It grabs the 50 EMA. We hop in the trade. Boom. Ride it on out. Now, right here, you would have been up 80 pips. And then news hit. I'm pretty sure that's a news candle. News hit. And you'd be like, what the freak? No. And then you would have been like, whew. Okay. And then you still would have caught over 100 pips. Or you could have waited and seen news was about to come and you could have got out the trade, not being greedy. And then got back in the trade, really, because it grabbed the 50 EMA again right there. You could have hopped right back in, pow, and then took advantage of catching the rest of it. But anyway, the point is the trade worked out. That was a good day, good trade. All right, we're going to look at one more example and then close this video out. We're looking right here in this area. And as you can already see, if you held this trade, man, you could have caught all kind of pips. But anyway, here's our consolidation area that we're looking at. That's kind of hovering along that 10 EMA. Now, this one actually never touched the 10 EMA, but I still consider that a consolidation because it's kind of flattened out. Price was coming down into that consolidation area. And let's go ahead and mark the lowest point in that consolidation, which is going to be at the bottom of this candle body right here. So here's our 9 o'clock chart time candle, this red one here. And as you see, it closed completely past the entirety of this consolidation. At this point, we go down to the 15-minute time frame. Scroll back over there. Here we go. And it didn't happen until the New York session, but price did in fact come up. It grabbed our 50 EMA. So you hop in the trade right here. Boom. Now that same day, it would have been a rather slow day. You would have caught over 30 pips, but still that's somewhat of a slow day. But if you would have held that trade into the next day, then I mean, you're looking at 170 pips, potentially even more if you continue to hold the trade. That's over 200 pips easily right there if you're a swing trader. You just got to have patience to hold the trade like that, I guess. I'm going to go ahead and conclude the video at this point, guys. Like I said, super easy, just 4 rules. Put any questions you have in the comments, and I'll do my best to answer those, but we'll holler at you on the next one.